Hi, Warriors. Welcome to the Gap Fest. President Trump is now saying that these tariffs are going to cause Americans some pain. Huh. I don't know. Maybe it's my memory. I'm getting older. I just don't remember him talking about pain during the campaign. Hey, how about that? Anyway, what do we do with the gaps? Hello, AJ and Ingmar and Mike, Ran, James, Michael, AJ, Ryan. Is it Friday? Yeah, Ryan. Hugo, Mike, everyone. All right. So how do we handle these gaps here? We haven't had a morning like this, and I don't
In a
remember.
week.
A week.
In a week.
All right. Well, let's get to it because you know, there might be some opportunity. Well, there always are. There's opportunities, but let's talk about these gaps now. So when I saw it last night, I go, God, it's going to take blow through the highs. I was looking forward to buying fib retracement in euro, and it gapped underneath the 61.8 and actually took out the 78.6. So I took a shot at cable because it held up the best on the break. It really did hold this. I did it on this candle, kind of a hope trade with a money stop. But it did hold exactly 61.8. It's the closest to filling the gap out of all of them. Aussie, we've been talking about this. It hasn't really been acting well. That there could be a new low. We have it. Canada, of course, blew off, coming off, and yen was higher last night, and maybe it's getting a little bit of a safe haven bid. I think the important thing today is yields are down. So if the dollar comes off, and I did the Dixie with stops over the high of the move plus 50, if the Dixie comes off, this can be instructive. You would think that the market would rally too, which NASDAQ is a little bit, but it, it, I mean, you could cover up the title and on S&Ps and say, wow, doesn't look as weak, but it's kind of like the euro. But you're getting some buying in euro. So what I was going to say, long way around, is if the dollar weakens and rates are low and we don't get a reversal in stock indexes, then Houston, we've got a problem. So I'm going to take it to the
Exactly.
yeah.
Exactly.
So let's take it around the horn and start off with Ryan. So when you saw how things came in last night, what did you think? And did you do anything, or are
I
you looking to
thought I'm
do
going back to
anything?
bed.
You went back to bed?
I thought I'm going back to bed. No, it's complete carnage again
Yeah,
today, and it's still going to go on. We've got a call between Trump and Trudeau sometime this morning, so we've still got that headline risk to get through. So if you're looking at something like dollar CAD, you can't take your foot off the pedal, because if he gets a deal done on this phone call, then we're going to reverse all of that. And if there's no deal or delay, then we're probably going to kick on up again. So we're not out the woods, and it's become clear. Correlations are breaking down. Your risk on, risk off is breaking down. I mean, at the open last night, everything was gapping 100 pips here, 100 pips there. Dollar
yeah,
yen was up 13 pips at the open.
yeah. I saw
Nothing,
that.
absolutely
Yeah.
nothing. So you've got to be country specific now. Um,
Okay, that's
those that
important.
are those that are in the tariff crosshairs and those that are not.
Okay,
You can't
yeah.
take the dollar as one trade now.
Okay. All right. So the regime change and uh, I didn't think of it that way. I thought about, not using correlations, intermarket type,
Yeah,
but like yields in the end, that kind of thing. But to now trade each currency based upon itself. And
Yeah,
yeah, that great.
because
That's a pearl.
he he could come out from this phone call and say, yeah, we've got a deal with Canada. They said they're going to play ball, blah blah blah. Dollar CAD absolutely dumps back down to 143. Okay, and
Right.
everything
Yeah.
else moves in line. So euro dollar rallies, cable rallies, and then 10 minutes later he goes, okay, that's Canada fixed. Now we're going to hit Europe with 50% tariffs. Well, euros just rallied on the back of the Canada news, and now it's going to get a spanking on the back of Trump again. So you can't don't get too tied in. Oh, it's all about the dollar going one way. It's not. It's different currencies.
Okay.
Horses for
Uh,
courses.
yeah. The true currency. Talking about what acted good and what came back was silver and gold. Silver was down about 30, 40, went right to 9-day moving average and held here on the daily. So looks like it has new highs in it. And so the gold looks like it has new highs in it. But their targets that I've heard like around 28.50. That's one day away. So just one thing to keep in mind on gold is we're starting to diverge at new highs on the 4. And, really, if you look at a telescope, a scope, come on. All right, look at the weekly.
Hey guys, just so you guys seeing some of the headlines that just came out. Sorry, Dale, didn't
Oh,
want to
that's okay.
interrupt there.
That's all right.
The Hassett says Canada appears to have misunderstood the language in Trump's executive order. All of a sudden, the dollar Canadian just literally dumped about 70 pips to test below 146. I got triggered on a take profit at 146. Forgot it was there, and yeah, I mean it's that we're
Nice.
seeing some movement there right now.
Yeah, yeah. So, yeah, nice move. You're just talking about things coming off. Look, cable's only 27 lower. The way I looked at it is okay, it got here in a different manner uh, than I thought it would. I didn't think things would get to levels on gap higher openings, but um, I still felt it was worth trading a level and a retracement, even though it didn't, line up with the way I wanted it to, you know, decline into the buy zone. So, cable looks okay. I mean, we could. It looks like they're trying to turn it. Okay, so anyway, now you know the relative strength. I mean, this is it. If you're going to fade the dollar, cable, I think you have a gap in EG, right? So this was something Kman was hoping for a rally to get on. Um, you
I
could
didn't
almost
wait
call,
for it.
yeah, you could almost call it a breakaway gap.
Good morning,
Good,
everybody.
good morning, Kay.
I actually didn't wait for it. I sold it on Friday.
Oh, good move.
Hmm.
Nice. Okay, so what do you make out of a gap that, I look back all
Uh,
over my chart, you don't see many of these in EG.
oh yeah, there's gaps everywhere. I'm not a gap trader, really, but
Okay.
yeah, most of the time you see corrections in those moves, especially when the situation is fluid. With Hassett now commenting, I don't know what he means by saying that the Canadians misunderstood him. But yeah, I think it's all still, and that's what Ryan said, and we spoke about on the
Yeah.
Flow Show as well. It's Animal Farm by George Orwell. All animals are equal, but some animals get tariffed more than others. And that's what we are going to trade for a while. I do think, though, that the bond market tells us something because it was thought that yields would actually shoot higher because of the expectation of potential inflation, but they didn't. We only had like a 5 BP or so, 5 BP's rally. I think that could potentially be significant because, as I always said, like, I mean, it's bad inflation, and I'm not sure that the market should really react to such kind of inflation, but should rather look forward to the potential that tariffs and trade wars have on global growth. And if you
Yeah.
take that into account, your yields shouldn't actually go higher but lower. And I guess the bond market is now trying to figure out what's to come, what is really going to happen.
Well,
But
they're
it's
sharply higher TLT in the
yeah,
aftermarket because we
yeah,
closed down here.
yeah.
10-year
And I
rollover.
wouldn't be surprised if this move continues sooner or later. Look at
Yeah.
if you look at the European yields, they have actually plummeted, and that the risk of tariffs is clearly there, understood as negative for growth. And instead of we are going to sell bonds on the back of potentially higher inflation, I think it would be the wrong trade, and that's my view. So,
Okay.
to sum it up, I think although it's going to depend on risk, of course, but if you look at the comparison between the potentially tariffed and the other ones, I guess stuff like yen, perhaps even Swiss to a certain extent, they should be doing okay as currencies in current context, especially as well if we think about the potential impact being lower yields. That should be a positive for yen as well, and to a certain extent for Swissy too, because that is now an ultra low yielder as well.
Okay, I want to ask you a question
Mm.
about a lot of people have been fearing for a long time that China was just going to let the yuan go. And
Mm.
now that this tariff war is on, look at where we're at. We're
Yeah,
at
because they
major level. Yeah, so could part of a retaliation be from China is to let the yuan go to 8?
they 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 cannot do it right now, and they even said overnight that they won't let the yuan go. But it's not what happens today, but what happens in a month or two time.
Yeah, right.
When we will, when they know exactly what is going to be tariffed and going through where, because imagine that they find a deal with Mexico, for instance,
Yeah.
the Americans, then you're still going to have a flow of Chinese products flowing through. So I think they're readying it, but they can't let it go. They can't let the market decide in their place. I think is what is now on the mind of the Chinese, is that we will let it go, but when we will decide to let it go, and yeah, in the meantime, let the market do its guesswork, and
Okay.
yeah, it'll
All right.
probably go, at some stage.
Well, I'm going to turn it over to Blake, but one last statement, and don't forget about this, that this doesn't just go one way. So the other news is going to be what retaliations, if they are taken, are. That's the other part of the equation. So, Ryan, what do you think about that? That's something else. It's a two-sided sword. It's not just us. It's not going to be just us. I heard the to-be Canadian Prime Minister talking about how disappointed she is, but they're going to, she called it a matter of national sovereignty, what's going
Yeah.
on. And, so there are going to be tits for tats. How is that going to affect trading?
Well,
The
that's the
tariff,
thing.
yeah,
It's the old game of chicken, isn't it? It's the Mexican standoff. Who
yeah,
blinks first? Canada came out. Yet we're putting 25% tariffs on. Retaliate. Mexico, Shine Bomb said they're looking at their plan B, and the
right.
details will come out today. What they're going to do in retaliation.
Wow.
we had who was it? Colombia. They folded pretty quickly after
Yeah, they
threatening.
did.
So
Yeah,
it
Rubio
depends how
went down there.
the question all these countries have got
Wouldn't
to
you
ask.
be afraid of little Marco Rubio in your face getting heavy with you? Huh? I mean, that's what President Trump called him, little Marco.
Yeah.
So, oh yeah, like Ferdinand Marco? No, Rubio. Okay, so
Yeah.
anyway, yeah.
Every
So
every
we have the
country is
canal back yet? We
no
have
chance. He might
all
get something. He might have to sail his little shit down there or something and block it off like we got like we got in
I,
the
Rod
canal.
Serling could not have written the script. Okay, so all right, so we have to look at the other side. So Blake, we're coming in long puts. I look at this gap in S&Ps, and it's the largest. And I think, don't you think people have like recency bias, that especially if the S&P's gap down, for sure it's going to be a gap fill.
Well, that's the
Yeah.
thing, right? Everybody thinks, oh, for sure it's going to be a gap fill. But I said this in the chat room earlier today, Dale. A couple hours ago, I'm like, today's not your normal day. Usually we'd be like, oh, well, S&P's down 1.5%. It's going to fill the gap, but there's going to be people lined up to sell today. This is a bit of a different market that we're in because of obviously all the headlines over the weekend, right?
Yeah, well, yeah, I'm hearing people saying that we have an orange swan, not a black one.
I got numerous overnight. I got numerous emails in my inbox that was like, "This is it, sell." Overwhelmingly. So that's a little scary. That's a little, a little bit of a risk because everybody's kind of saying the same thing. Like it's time to hit the bid. It's time to get out. But at the same time, I think everybody's saying it for a reason. I mean, this is the tariff situation. Let's. I'm not going to mince words here. Trump's going scorched earth right now.
Yeah.
He said even on Friday, he's like, I don't care. I don't care. Like stocks can come down. Like I don't care. Now is that him just warning or just
getting in front of a correction? Yeah.
I mean, I don't know.
Yeah.
But let's look at a few things, and I'd like to hear what Steve has to say, because I see Steve is here. But I want to just show you guys a couple of things. Like you take the Aussie, we broke some and took out stops below some major support. I mean, you look at like.
Look at that divergence, Blake.
Massive divergence, hella divergence, and we got a huge hammer today, obviously on the weekly candle too, but huge hammer. But today is far from being over too, so that's the other thing, right? I mean, I have to keep that in mind. This candle will not close for another several hours. So, but we did take out all the stops below, so anybody who was long just got whacked. They're gone. Euro, very similar. We got close to lows, but we didn't make a fresh low. That's why the dollar index hasn't hit a new high for the year. Kiwi also took out the stops below 55.50. I even said on the week ahead video before the headlines hit, I'm like, we have to watch Kiwi at 55.50, and we did. We took stops below there. Now, again, there's a lot of daylight left today before things close, but one of the other things that a lot of us took advantage of is last night, these gaps. Like you look at the dollar yen, the dollar yen was trading at 155.70 last night. I shorted a bunch of dollar yen overnight when it was up here above 55.50, and it's come off pretty well. I think the yen's gonna, especially if stocks stay weak, which I'm assuming, unless we get some sort of renegotiated tariff, something rather with Mexico or Canada. I know, as Ryan's pointed out, Trudeau and Trump are going to have a conversation. And of course, those two guys love each other. Like it's like a bromance. I'm being very sarcastic. Trump hates Trudeau and Trudeau hates Trump. So who knows how that conversation is going to go. But let's say nothing gets done. Stocks continue to stay weak going into tomorrow. I think the yen's going to hold a bid. And it's not just the dollar yen. I mean, look at the major breakdowns that you're seeing in the New Zealand yen, in the Aussie yen, in the Kiwi yen. There's the Kiwi yen. Here's the Aussie yen. Massive breakthrough support. Canadian yen broken out of its ascending channel. That's broke. Euro yen's probably approaching triangle support. We're getting close. So, I mean, think about what happens if you get all these other yen pairs starting to break. I mean, the yen itself, we could go on a pretty good, bullish run. So that's something that I know we've been talking about it a lot in the chat room. Simon's been saying, every single day, the dollar yen is a sell on rally, and I couldn't agree more. It's just the carry cost is there, but when people run for safety and they don't have the dollar, or they're scared of the dollar to run towards the dollar, they might look at the Swiss franc. They might look at the yen as other options. So anyway, we didn't hear from Steve yet. Steve, what are your thoughts? I mean, when you saw the headlines on Friday and over the weekend, you've taken some time to take it all in. What are your initial thought processes here regarding Trump and his negotiating tactics, and where is this all
I
going
don't
to go?
even know where to begin, mate, honestly. I have to say two things. First of all, I've said before that reservations about if Trump is willing to let the markets tank to do what he wants to do were misplaced, because people are not going to be voting for him in a month from now.
Or 4 years from now.
Exactly. So when they're voting, nobody's going to remember what happened to the stock market 1, 2, or 3 months after he took office. They will remember where the stock market was when he did, and where the stock market is when he leaves. Right. So that's point number one. So I don't think that Trump is going to be pushed by a blip in the markets that have anyhow had an unbelievable multi-year rally, right? Because he's not going to be judged in the polls again, right here, right now, not even next year. Point number two, I have no idea if they believe in what they're doing, or if it's all, theatrical type of a move.
Yeah.
But there's nothing good that can come out of this, right? There is a very specific reason. Today I was listening a little bit to Alex Jones, and I'll explain why. I was very, very curious to see what the average American is hearing having to do with, what tariffs are supposed to be doing, or what the average Trump supporter is hearing.
And Steve, let me just clarify something. The average American, I don't think really pays attention to Alex Jones.
Yes, I agree, but the rhetoric.
I was just going to jump in and say that, Dale.
Yeah.
I mean that
that doesn't represent the average American.
I believe that very intelligent Greeks are bigger fans of him and listen to him more than average Americans. Like you.
I think I've spent 20 minutes in total in my life.
Oh, you've got his poster up in your trading room.
Yeah. Today I
deny
spent
it.
10 minutes because it came through my Twitter feed, him talking about what supposedly tariffs are supposed to do, right? And I think that he's just, acting as a speaker to pass on the message of what supposedly the Trump administration thinks tariffs are going to do. Yeah. And all of what he said is wrong and misplaced. He, in essence...
And so explain.
He, in essence, photographed running big deficits against Mexico, against Canada, as being some kind of an exploitation from the side of Canada or Mexico. Completely forgetting that whatever the US imports from any country, not just Canada or Mexico or whatever, is on a voluntary basis. And you import stuff when you think that either these are the best stuff you can get, or when you think that these are the stuff that come at a more competitive price. One of the two, or sometimes both, right? Now, the fact that the US is running in general a huge merchandising deficit, by the way, speaking about it, during December, the US ran its biggest merchandising deficit it has ever done in the history of the country. Something like, if I remember right, 122 billion in a month, right? So you can multiply that by 12 and realize what kind of a merchandising deficit we're talking about. The fact that the US is running such huge deficits is because the US is not producing many of the stuff it used to produce in the past. And I'm afraid that by increasing the price of things that you import, is not going to suddenly make the US produce stuff that it doesn't. Eventually, if you make everything, extremely expensive, yes, some more stuff are going to be produced in the US because it will make sense, but that won't change the fact that that's still going to, force consumers to pocket a lot of more money, to buy the same stuff they're buying. So the solution is not making everything a lot more expensive, is trying to deregulate the US and give incentives to actually first be able to produce in a competitive way stuff in the US. And then you don't even need to put tariffs in place for people to shift in buying American products. But now they're trying to put the cart in front of the horse. They're trying, in essence, to force people to buy super expensive American products because the alternative is going to be even more expensive. At the end of the day, I think this is a negative sum game. Everybody is going to be damaged by this kind of a trade war, but I think the US is going to suffer the most.
And this is where you take in what Dale was just saying a little bit earlier. If you see the dollar sell off with risk in the market stay risk averse, this is going to be a problem. And I've long said that if you see the bond market come down yields go up, but the dollar doesn't respond to that and it goes down, and you see stocks go down, you want to probably be out of every U.S. asset at that point in time. That is.
Oh yeah. By the way, thanks for reminding me.
Uh-huh.
If the dollar keeps strengthening, that temporarily is going to be alleviating some of the pain from tariffs, as you understand. Because
that's what's expected, right?
But imagine what's going to happen.
Yeah,
when
the dollar weakens.
When the dollar reverses, right?
Yeah.
Which on its own is going to enhance the pain of tariffs.
That's right. Yeah. And it's not just tariffs. There are going to be supply chain issues and spot shortages of everything. A lot of things.
Yeah, but that's going to be temporary because the market always resolves these kind of things. The problem is that the new equilibrium is going to be one that Americans really aren't going to like.
Well, I went out and started stocking up on toilet paper again. How about you?
Unfortunately, toilet paper is the cheapest one to stock on. The problem is that the vast majority of things people consume are things that you can't actually stock, or at least you can't stock for a long period of time.
Well, in the hole, I hide an avocado. All right, anyway, thanks, Steve.
Well, hey guys, and thank you, Steve, for your opinions there. I agree with Dale. Thanks. Today, let's just not forget we do have, I know amongst all this other stuff that's happening and everything that's happening right now, we actually have ISM manufacturing data that's coming out, and some S&P, PMIs that are coming out as well. That data is going to be a market mover. This is a jobs week. So we have Canadian jobs, we have non-farm payroll at the end of the week. We have both PMI ISM data, both services and manufacturing PMIs that are coming out this week. All going to be potential market movers. I know it's all overshadowed right now by what were, the tariff and negotiations, but real quick before I go and pass it over to Dale, because he's bringing in Melody, and Melody is for anybody that owns real estate in any way, shape, or form here in the U.S. or outside of the U.S. should be listening to this interview coming up. I usually record the podcast right after here for those people that miss F.A.C.E. I usually do the recording while Dale's doing his interview, but I'm actually going to listen to today's interview first because I think it's a really important one. But anyway, before I do that, I wanted to go just real quick. Ryan, what are you looking at today? You looking to trade anything right now? Kman, I'm going to come to you next.
Just see what this Trump phone call's all about. Keep an eye on that the double top in dollar CAD around that 147 area. Whether we're going to close above or below it by the end of the business.
Okay. All right. Sounds good. And just so everybody knows here, I shorted dollar CAD last night. And then I just got limited out at 146. I was short at 147, like 30, my cost average. If you were on the week ahead video, you knew exactly what I was doing. You guys know that I was shorting up at 147.50. I did it, and I got limited out this morning. So and I'm shorting it on rallies this morning. So that's what I'm doing. Kman, what are you doing today?
Two things. I'm well, I'm still a bit short euro sterling, a bit long gold, but on data, the data this week, they are all going to be backward looking because Trump opened a whole new box of toys, right? But what I also said on the flow
Let's
show
better
is
call
that
it the Pandora's box.
yeah, is that those data that we get, some of them will trigger algo moves or model moves. And if you have a plan to trade, those could give you an opportunity to find entry levels. And I'm more going to use the data that are coming out this week because they will be before, taken before the tariff period, as opportunities to drive potentially the market to levels where I'm interested to trade.
All right, very good, Kman. And just so everybody knows here, you guys jump in the Forex Analytics community. I came in flat this weekend, you know, and I started trading last night. And you can see like open positions that I was in, what positions Kman's taking. Ryan, he posts his trades here amongst so many other traders. So, you know, and on top of like all the news headlines that are moving the markets, are, you know, the general chat room where we're obviously having a lot of different conversations about everything that's happening. And it's obviously been very busy the last 24 hours in our community. So if you guys want to, you know, have this tool and have a community where you can discuss what's happening with other traders, know what I'm trading, know what Kman, Ryan, you know, other traders are doing, it's $1 for 10 days. Try it out. Download the mobile app and get involved in our community. This is the time you want to be chatting around. So, Dale, enjoy your interview. Steve, thanks for being here. Brian Kman, obviously.
Thank you, guys.
Enjoy your interview
Enjoy the
with
interview,
Melody.
Dale.
I look forward to this
Thank you.
one. I'm going to be listening in as well before I continue on with my day. So, thank you very much, Dale.
All right. Well, thank you, Dream Team, for having the community prepared by saying be careful over this weekend and flatten out and be prepared for an extreme move. Now we'll try and figure out which way to dance. But here's my dance partner for today. It's Melody Wright. And Melody, welcome back to F.A.C.E. Great to see you. And a lot of the things that you were talking about prior to the election, I follow your stream and some of the things you've done with Danielle. Fill us in with where you think the state of play is in real estate in light of the fires in California following the floods in Florida. Are tariffs going to affect construction because we do import a lot of lumber, and will a trade war? What kind of effect will that have on developers even wanting to build anymore?
Well, thank you, Dale, for having me. It's a pleasure to
Great to
be
have you
back,
back.
and it's good to see you. So there's a lot going on, right? We knew that
Yeah.
this was not going to be a boring year. So let me start with kind of December sales, which were actually a much stronger than anyone really anticipated. And when you look under the covers, they're stronger even still, because I track about 84 markets. And we had seen sales kind of slow down after that strong October. And then in December, they accelerated again, even in the West. And so I think what is happening between the fires and the hurricanes and all the speculation that we've had in the market, I think the landlord class is coming to terms with the fact that it's not going to be fun to be a landlord anymore. As well, they can't cash flow. And so when you look at places like Los Angeles, they had a very low owner occupancy, meaning and home ownership rate, meaning that there was a lot of people that rented there. On social media, people say, well, not in the Palisades. Actually, that's untrue. Even in the
Really?
Palisades, oh yeah, a lot of
Well,
people.
yeah, but what's rent there? $5K a month.
Oh,
in the
100%. Yeah,
Right.
it's
Yeah.
ridiculous. But
Yeah.
I think that people don't understand is that a lot of the homes that were lost were actually second homes, which is going to make things very different than if it was just all primary homes. Same actually in with Helene, a lot of that was primary homes, but also a lot of second home ownership, short-term rental ownership. And so I think what everybody is realizing as those taxes and insurance increase is that they don't want to be a landlord anymore. And if they do, maybe they only want one property instead of the 10 that their bank told them to take out leverage for, because that's what these non-bank lenders would do. They come in and say, I want to buy one short-term rental. And they say, why buy one when you can buy 10? And I saw that over and over again. And so I think what's happening is that motivation that we saw at the end of last summer. And I talked about that motivation meaning, hey, I probably need to sell this property in the next couple years. It's, that kind of thing. Let me just go ahead and do that because this just doesn't make a lot of sense. What I'm seeing, I just paid my tax bill. But what I think you're actually starting to witness is motivation turning to distress. So I still oversee some mortgage books and I do delinquency reviews. And you can see comments of people saying, I'm trying to sell. I'm behind in my mortgage payments. I'm trying to sell. It's been sitting on the market since September. And so,
wow.
Yeah. And this is just beginning because I think everyone thinks that, there's so many government workouts out there. But the fact is, people have taken the limit of those government workouts because during COVID, they took the limit of those. And so now as we have layoffs and bankruptcies increase, people are becoming under distress. And I think last year in 2024, everybody just put pause on everything because they didn't know, oh my gosh, what is going to happen in the election.
Yeah.
And then we had rate cut hopium all year long. Remember, it started in December. It kind of it died off after the end of the spring. And then it started, accelerating again. And then rates were cut and the mortgage rates didn't go down. And everybody was like, wait, what happened?
Yes.
And so I think we lived on some hope or hopium last year. And now everybody has woken up to 2025, looked around and said, okay, nothing's coming to save me. I'm going to have to take action. And we're actually seeing non-seasonally inventory start to accelerate again. Typically, everybody pulls their listings for the holidays. They don't really get back out there until, late February, March, unless you're in Florida and Arizona that are the snowbird states, which have already been, inventory is climbing in Florida, hitting all-time highs there. But you're starting to see it everywhere else too. I think a lot of people thought those refugees from Los Angeles were going to move to I've heard it in Nashville, Denver, all over the place. Again, everybody thought the Californians and the New Yorkers during COVID were all going to move to their town and they built that way. And so, moving to tariffs really quickly, we're oversupplied. And this is something that people don't understand because NAR has pushed a narrative out there, National Association of Realtors, that we are undersupplied. They started that nonsense back in 2017. In reality,
we still hear it, Melody.
I know it's still going, but we just had two studies come out, the Cato Institute, Taylor and Francis, both challenging the housing shortage narrative. Taylor and Francis saying, we've built 3.3 million more structures than we've have households. And we have 15 million vacant properties. The boomers are actually 15.6 million of them will pass on between 2025 and 2035. They own the majority of the homes. So there are just so many. Plus, we've built
houses don't die. Just
No,
the
they
people
don't.
that lived in them.
That's right. But you might have to do some repairs, but they don't die. And we've got 9.5 months of supply from the builders, non-seasonally adjusted. Okay, 9.5 months of supply. And by the way, Dale, that is not what's out there. It is way worse than that. As you know, I've traveled all over the country. I've seen it for myself, and it's 3 times as much as that. I promise you. As well as we have single family rental at, I track Zelman. That occupancy is at one of the at their survey low right now. And multifamily occupancy is also going lower. Vacancy is up. So there's a lot happening for housing. And I think that so the builders came out. I don't know if you saw it. They sent a letter to the president and they said, please, sir, please help us. We can't, these tariffs are going to kill us. And, what I saw on social media is people don't care. The builders have no friends. And so I got to be honest with you, I'm a little surprised that a special interest group has been put on the outs like this, because not
Yeah.
only do they have the
It's a
headwind
big
of
lobby.
the tariffs, the tariffs and labor. I mean, social
Oh,
media
yeah.
was all abuzz with empty job sites for the past week. And so builders have a lot of headwinds coming their way, and they have a ton of inventory they're going to have to offload into the market. So things are getting very interesting. But I think believe it or not, I just came out with my forecast. I think we're actually going to have a bit of a stronger year in sales volume than we did in 23 and 24, just a little bit, about 2% increase. But what that means is actual price discovery, Dale. And I think we are
Okay.
absolutely going to see, if we're looking at the NAR series or National Association of Realtors, I think we're going to see about a 9% price decline this year. And I know everyone's going to call me crazy, and that's just fine. So happy Monday on
Happy
this crazy Monday.
Yeah, we call it's a gap fest. Every chart has
Yeah.
a huge gap in it. So let me ask you, people that have mortgages at 3% for years before yields went up, the argument is, why would they ever sell their house? They can't live cheaper anywhere, renting, buying another property. I guess they could cash out, but why would they ever move? And isn't that a big part of supply?
Yeah, so it's the ones that don't have a choice. Dell is death,
Okay.
divorce, default, and the DOD, who moves a whole bunch of people every year. And so over the holidays, I'd had a few people contact me over the past year about default situations, because everybody knows I used to run default, just wanted my opinion. Over the holidays, I had several people. So I'll give you an example. A person, apparently, this a child was supposed to be taking care of her property, had power of attorney. They took out a loan. They got into a default situation. This was supposed to be shared between, three
Yeah.
siblings. Two of the siblings were going.
Aren't some families wonderful
Oh,
when
yeah.
it comes to money?
But Dale, it's like everybody. I mean,
Yeah.
this is multiple cases where the child that was supposed to be taking care of business for, the estate totally did the wrong thing. And so, what'll happen, they're either going to sell that property. I'm helping others sell their parents' homes and properties, or they're going to sell their property and move into that property to retire. And so there are reasons that people will not have a choice. Also, the work from home mandates. You're now hearing, I mean, people are coming back to work, and they moved out to the exurbs, and they can't actually afford that hour and a half commute anymore. It's killing them. And so it's where people don't have a choice.
Yeah. Okay. So what about policy? I know that President Trump wants Powell to move, and Powell pushed back, and I think we're going to need the other part of the equation would be employment weakening, would be maybe the nail in the coffin.
Absolutely.
All right. So, they're saying the employment's strong. You're looking for a decent year as far as volume of sales, but it's because people are going to start not believing their estimates
That's
anymore,
right.
right? Okay.
And they have to move. Yeah.
Okay. Anything special about what's happening I read how all the seniors are fleeing Florida. You're reading about 50% price cuts in Florida. Is it, even though there's probably pretty good deals, with it not being able to insure homes being a new factor in real estate, between California and Florida and other flood zones and fire zones? What's going to happen to California homeowners with getting fire insurance now?
Yeah, they're not going to be able to get it. I mean, in the FAIR plan, which is kind of the state-backed plan, there does not look like it's going to be able to cover these losses. And so I think insurance as we know it, Dell, is about to change. And because you just all over the place, and it's even in the Midwest, because they have hailstorms and places you wouldn't even expect. So it's just not the coastal cities. But honestly, Florida right now, even with the deals, because of the insurance, I would want to see what is their answer to that. And the same in Los Angeles. What is the answer? And until then, I would not be, trying to in Fort Myers, we saw like after the hurricanes, everybody thought the investors would swarm. You've got inventory at the highest levels there, beachfront properties for sale because people can't insure them and it just doesn't make sense. And so I would wait until there's some sort of solution for what's happening in these markets.
Okay, well, when you and I talked and I said, well, how could we take advantage of this bear market in real estate? You brought up Airbnb,
Right.
which, did collapse afterwards. And you talked about the housing stocks. They were at the top and they led the decline in the market, and they're really not recovering. Even when the market rallies, they don't rally. So could there be any big banks to fade? Who would get hurt most in this? Could it be B of A with their long duration paper, or is there something on the public market, mortgage companies that are going to get in trouble that are nice specs on the short side?
So, yeah, the banks are going to be in trouble, but that's, I think, going to be down the line. I mean, they're a mess no matter what they say. But the non-banks, Dale, have no idea what they're in for. So your Mr. Coopers, your Penny Macs, your Freedoms, they are about to experience pain that they have never and it's already happening. I still oversee these books, and so I see what's going on at the mortgage servicers, and they are dying under this volume from all of these disasters, because you would not believe what you have to do, Dale, when something like this happens as a mortgage servicer. You have to go out and inspect all those properties. You have to take all these calls. You have to do things for all of the agencies, the GSEs, et cetera. And so the non-banks are about to get crushed. It is going to take time. So, and there's going to be politics involved, but I honestly believe, watch those, look at their borrowings. That will tell you everything about them, when they're due, when they're going to have to
stocks. Do you have any stock symbols on those?
Coop is Mr. Cooper is COOP. I think Penny Mac, I forget what they are.
I'll look it up.
Yeah, but I'll send you a list after this, Dale,
Okay.
of all of them. I mean, Rocket, UW, all of them are about to just experience something they are not prepared for. And if rates do go down, let's say we have some sort of event and we have, that old flight to safety, their servicing asset is going to get cremated. They've been going along just fine, because when rates rise, they can write up the value of that servicing asset, because it's all about the prepay speeds and thinking that they won't prepay in time. And so if rates go down at all, as well as they aren't having the origination to cover over these expenses and servicing because of default and these disasters, then they are going to get cremated. So calling that, it would be a really good when that's going to happen. But I'll send you some additional companies.
It's interesting. Yeah. I've looked at a few long-term counts on the TLT, and the one that appeals to me is maybe one more low in TLT and then a move to 120. So that's a huge bond rally. So
right.
Those would be great shorting candidates. And I remember something from our first interview. You said the video was a fraud. And do you recall that?
Oh, yeah.
All right. So I caught in the video a few times. In fact, I was there last Monday. It feels like a month ago. But why did you say that? And what are we going to find out that's starting maybe to be reflected in the stock price?
Yeah, so I would encourage everyone to check out Nobody's Specials deep dive on NVIDIA, my buddy Jack. So it really goes around CoreWeave, these orders, this what people are calling the round tripping, this booking of revenue they don't have, but based on orders of chips that will never be delivered. I mean, it's just there is so much there.
Wow.
And it is.
How come no one talks about it?
They do. It just doesn't get on mainstream. I mean, you can find these CoreWeave stories all over the place, and everybody knows. Go back and look at their. They got fined, banned. Now they're all these same crooks are, at the company. Check out Jack, Nobody's Special on YouTube. He does a great deep dive into this. But yeah, it's not kosher, guys, at all.
All right. Well, I tell you what, it was great getting an update from you. Anything else that we should be watching for with, the red wave, anything on the political side? Even President Trump believes there's a housing shortage and wants to do something about it. Do you think he really believes there is one?
I don't. I actually don't. I
Okay.
think Gordon went to FHA and said, "Bill, Bill, Bill." But in reality, these two articles, one from the Cato Institute, which is libertarian, and then another from Taylor and Francis, which seems to be backed from the tech sector, all calling into question the housing shortage narrative. So I think that was performance until they could change the narrative, to be honest. So
Okay. Well, it sure did not help Kamala Harris with her plan to. We talked about this before, but you know what?
yeah,
What you're doing right now can save people's asses, and it
that's
would have
right.
been if they listened to you sooner. But it reminds me of a guy after the Y2K bubble. No, the dot-com bubble busted, and he was long all these internet stocks, and they started going down. And he said, "Well, I don't want to sell them because I'll have tax consequences." And then he ended up not having tax problems because he ended up with losses. So it's better to, if you have a gain, to take the tax hit than watch it evaporate. Is the
That's right.
lesson, right?
Yeah,
All right.
absolutely.
All right. So follow Melody. And I know everyone out there got caught up in the hype in real estate. And what would you say to people that look at this as hopeful, that do not own a home? They're being squeezed. I really cannot shed any tears for the Snidely whiplashes out there that are, not enjoying being a landlord because, I've been tied to the tracks before, living in North County, California.
Tied to the tracks.
Anyway,
Yeah.
so
Yeah, there's hope is what I would say, Dale. There's
yeah,
hope. And just, try get rid of that debt, stop spending on Starbucks, save your
yeah,
money. There is hope
okay,
out there. I promise you.
okay, and be patient, like
Be
waiting for
patient.
trades.
That's
So I
right.
mean, you probably have to wait a couple years to let the dust settle, right?
That's right. Unless you're very aggressive and good at negotiating, because there are going to be some deals in certain areas. But follow me, get the free version of my Substack.
I just
I
posted it. Everyone that's here, I posted it. That's me. That's her Substack right there. And what's your X handle again? I can't
It's M
remember.
it's M3_Melody,
Uh,
MELODY. Yes.
gotta see, it shouldn't be that tough. Anyway, Melody, Happy New Year.
Happy New Year.
I hope this is a great year for you, and that people give you even more recognition than you've gotten currently. And I know you're going to help a lot of people, which is beautiful.
Well, thank you, Dale, and good luck to everybody out there today. This is going to be one crazy,
Uh,
crazy year.
you
So
know,
thanks, everybody.
the difference between pros and amateurs are pros know how to lose. So they have
That's
money left to be right with. And that's true in real estate and in any investment field. Manage your risk.
that's
So
right.
with that being said, thanks so much, Melody. Great seeing you.
You too.
Great smile, and I'll talk to you in the spring.
Yep. See you again next
Yeah,
time.
yeah. Okay,
All
Melody.
right.
Melody,
Bye.
right, everybody.
Bye,
Watch
everybody.
this recording again. They're thanking you, Melody. All right, guys. So did you like her? I'm telling you, there's a lady that is really on top of things. I forgot, Scott. Yeah. Anyway, but you could find her, and you could probably email her about that. Okay. And if you haven't yet, spend $1 and get into the room. This is going to be a great week to trade. We have either gaps to fill or accelerating moves. Either way, they're ups. Okay. Don't just count your pips, count your blessings, everybody. Be back for Turnaround Tuesday with you tomorrow. Adios.